everybody. Thank you for joining us. I hope everyone's a little excited. I'm a little tired. It's been one heck of an evening. So my name is Juan Kim. I'm the head of sales and marketing for NCM Investments. And I will be your moderator today. We have, over the last few weeks, been collecting questions from across the country because we knew that today would be an interesting day. And I'm going to start with some introductions. First off, we have Phil Diorio. Phil is the lead manager for the NCM Core American and Core Global. We've got Jason Isaac in Calgary. He's our lead manager for the NCM Global Income Growth. And joining us right now is Alex Sasso. He's our lead manager for NCM Small Companies and NCM Income Growth. And in the corner over there is Michael Simpson. So I wanted to take a second and introduce Michael Simpson. So we're going to make this more formal next week, but Michael has joined NCM, is going to be the manager for the NCM North Fund, which we're planning on reopening next week with the North American dividend mandate. So we're very, very excited. So I'm going to kick things off with some questions that we have collected. And I'm going to start with Phil because he leads our Core American Fund. So Phil, the first question comes from an advisor in Calgary collected by Joe Barone, our regional wholesaler there. If there's no clear winner, I can't believe this question came in. If there's no clear winner the day after the election, what is the short-term impact on the U.S. markets, and how is the NCM Core American Fund positioned?
Thanks, Juan, and good morning, everybody. You know, thinking about all of this, maybe first off, it's good to take a step back and go put ourselves 4 years in the past, back to 2016, and what happened back then was the polls indicated that Hillary Clinton was a sure thing to win the election. But somehow if Trump managed to win the election, that the markets would crash. And, you know, sure enough, a lot of these expectations, you know, consensus thoughts of how things would play out ended up being wrong because Hillary Clinton lost the election, Trump won. And the morning of, you know, the markets went down, but by the afternoon, the markets were off to the races. So, you know, all of us on this panel and in the markets, investors and advisors and portfolio managers, everyone's been thinking a lot about this election and trying to figure out what's going to happen and how the markets will react. But at the end of the day, it's really tough, as we can see this morning. I don't think anyone was expecting the markets to surge the way they are with uncertainty of not really knowing who's going to win. So it's pretty amazing. You know, what's going to happen? You know, it probably depends on who wins and how they win. And it'll have lots of different implications. Some people were thinking that there was going to be a blue sweep, that Joe Biden would win the White House and the Senate, and that would lead to some very sweeping changes. You know, that's looking very unlikely now. It looks like we'll probably have a split of some sort. And depending on how it all shakes out, it's going to have an impact on the growth of the economy. It'll have an impact on a lot of different sectors of the stock market. It'll have an impact on the growth versus value dynamic. And of course, implications on trade agreements with Canada and a lot of other countries around the world. So what we're going to do on this panel discussion is get into all of these different scenarios and implications that might play out depending on who wins the election.
Absolutely. That's great. So the next question actually ties nicely from a global perspective. It's for Jason, and it comes from an advisor in Brampton submitted by Raul Chawla, our wholesaler there. The question reads, my clients own the NCM Global Income Growth Fund. Excellent fund. And based on what's just happening, what impact will this have on trade relationships, in particular with China, with the Trump or Biden government?
Ooh, that's a good question because of all the powers a president can have, perhaps trade relations and setting the table for how international relations are done, the president has the most say. You know, they can do more. He can do moral suasion, or she can do moral suasion on the Fed and income taxes and regulations and things like that. But all has to go through Congress. Setting the table for international relations tends to be the most important thing they can do. Done a little bit of work on this and have drilled in deeper between the two candidates. And, while Trump, if he gets in, it'll be more of the same. His focus will be on trade deficits. He'll take unilateral hard lines against countries that he's not happy with, definite America first type philosophy. Continue a tough stance on China, and will likely be exasperated if he gets a second term, and he'll be emboldened a little bit. And then the trade war / dispute, however you want to slice it, will continue. Expect a series of continued one-off tariffs. He's done that with us in Canada. He's done that all over the place, and a very erratic approach. Biden seems to be cutting the line of a more multilateral approach. He has reached out and made overtures to try and patch relations with the EU. He has committed to spend, this is the one thing Trump hasn't done, but Biden has come out and committed to spend $400 billion on American-made goods and $300 billion of in-house R&D inside the United States. The thing that's interesting, though, is Biden hasn't come out and he hasn't committed to unwinding any of the tariffs that Trump has put on China as it sits right now. Now, all I want to do is put this on. Typically, the U.S. has a spectrum of how they deal with specifically China, and it ranges from an engagement, like we'll work with you, all the way to containment. We're going to cut you off from the rest of the world. Of course, under the Trump regime or administration, it's been very much under containment, with tactics being wide, unpredictable, one-off tariffs, and kind of chaotic. Biden will probably take a more narrow, focused approach. They'll, if they're talking semiconductors, they'll just talk semiconductors instead of snapping tariffs on steel or anything like that. It'll be very procedural and lawful. As a global equity manager, I tend to like regimes that have rules and regulations in place and stick to them and not all over the place. So from that perspective, a Biden administration would probably bode better for international equities than domestic equities on the margin. But right now, again, it's anybody's flip-up who's going to go in. But generally speaking, Trump's going to be a little bit more erratic and it will continue more of the same, and Biden will probably be more procedural. So,
okay, great points. So this question is all about Canada, and it's for Alex, who leads NCM Small Companies, NCM Income Growth. And the question comes from Montreal, and it's collected by Mario Rossi, our wholesaler in Montreal. And the question reads from this advisor, Alex, based on what's just happened, do you expect the business environment to improve in Canada with a Biden or Trump government in the U.S.?
Can you hear me okay, Juan?
Yeah, sound great.
Okay, great. Thanks, and thanks for the question. So, we've all heard that this is one of, or is, the most contentious presidential elections in U.S. history, and sure enough, doesn't it come down to late in the ninth inning here? But from a Canadian perspective, in my opinion, we may have less at stake in this election than we did in 2016. For me, 2016 election was huge for one major reason, and that one major reason was NAFTA. From a Canadian businesses did not know what the end of NAFTA meant to their business if they had goods that crossed the border, if they provided services to U.S. businesses or Mexican businesses. So how were goods going to trade without a free trade agreement? Were we going to impose duty on American goods coming in? Were Americans going to impose duty on Canadian goods going south of the border? None of us really knew what this meant. Were we going to reintroduce our old manufacturing tax? So I'm showing my age here a little bit, but that manufacturing tax was something we had way back when, and it wasn't, in my opinion, very efficient. But what did this mean for Canadian jobs, for Canadian industry, for protected industries, for the banks? NAFTA was, in my opinion, the most important issue that was in front of Canadians. But it wasn't just NAFTA. It was, the Paris Accord, the Paris Climate Agreement. That was rescinded almost immediately after Trump took power. And then don't forget about the Trans-Pacific Partnership, because Trump really introduced the America First policy. And incidentally, that Trans-Pacific Partnership, that group of countries makes up 40% of the world's global economic output. So not just for Canada, but for the global community, none of us really knew what this meant. So 2016 was a little bit more uncertain than today. No doubt Trump is and was and is a very different kind of president and politician than we've seen, and we didn't know what that meant. But it didn't take a rocket scientist to figure out that Trudeau's relationship with Obama wasn't going to be the same kind of relationship that Trudeau was going to have with Trump. And if you think about it, think back to the Mulroney days. Mulroney got a lot of deals across the finish line because he had a deep personal friendship with not just Reagan, but with Clinton and with Bush. So that was a big advantage that Mulroney brought to the table that under a Trump presidency, I don't think Trudeau's going to be able to bring to the table. Under Biden, I think he's going to rejoin some of these partnerships, or at least consider rejoining some of these international agreements like the Paris Accord and possibly the Trans-Canada partnerships. And these, in my opinion, are going to be good for the global community. They're going to be fairly good for Canada. The trade partnership with Canada is going to remain robust because of the USMCA. So it doesn't matter if it's a Trump presidency or a Biden presidency, because Trump put in the USMCA, that's going to remain. And if Biden gets in, I think he's going to be of the view that the USMCA is so similar to NAFTA, there's not going to be a lot of changes there. Reagan, Bush, and Clinton, I think, had a strong mutual respect for Canada. Trump did not. I'm not saying that's bad. I'm not saying it's good. Biden, I think, will be an improvement from a relationship perspective. Biden, I think, understands the importance of having friends north of the border and south of his border as well, and the importance of a strong business environment. I think Biden really understands that. And if you think of the USMCA, it's a relationship with three countries that have 7% of the world's population, but have 25% of the world's wealth. So I think it's very, very important that we continue to see goods flowing across those borders, and that we don't upset any of the capital that's been invested in these businesses. The one area of friction I can see under a Biden presidency is in the oil patch. So obviously, Biden's opposition to the Keystone XL pipeline is something that may cost jobs and economic output. Under a Trump presidency, obviously that continues to move forward. Offsetting that, fracking is 50% of U.S. production. So with the swipe of a pen, there may be curtailments on the fracking side that will force the U.S. to become, go from a net exporter to a net importer. But how all this plays out is still, at least in the oil patch side, is still comes with a lot of uncertainty.
Great, thanks, Alex. So my next question is for Michael. Michael, welcome to NCM. We're thrilled to have you.
Thank you very much.
I think there's a lot of your old fans that are tuning in and will be watching this recording. So this question actually comes from Toronto, and it's collected by Graham Roberts, our wholesaler here in GTA. And it's a question with respect to Canadian companies. So the question reads, given the uncertainty, how will Canadian companies with sales in the US be impacted with either a Trump or Biden government?
Okay, so going back to even before Canada, from 1854 to 1866, Canada had what was known as reciprocity with the US. That was a 12-year agreement of free trade. So Canada and the US economies have been integrated for a long time. Those companies with sales in the US will continue to sell down there. The two major irritants are tariffs, which we saw a lot of them pop up really for no expected reason. Normally, policymakers get notice in advance that a new tariff will come aboard. So if Trump gets reelected, I would say there will be a continuation of unexpected tariffs that come up. But Canadians have learned to live with it, and Canadians have also been smart and judicious where they fight hard, such as aluminum tariffs coming on, then coming off. So we have a lot of Canadian companies have a lot of deep ties to the US. I think they'll continue to expand that as Canadian market is small overall. Canadian companies will continue to go down. If Biden wins, ironically, some of the groups or states that push for tariffs or countervail are really Trump states. So I think Biden, as mentioned earlier, is more interested in international treaties, more interested in friendships and negotiating. So I think we'll see less of unexpected tariffs come up. From time to time, there still will be trade irritants, but less so under a Biden presidency. So certain companies like a New Flyer out in Winnipeg, they've been dealing with the Buy American rules for a long time. Manufacture a bus in Canada. They've expanded to the UK, but they also manufacture buses in Minnesota. So sort of the natural link, or finish that bus in Minnesota, painted in Minnesota, so it complies with some very stringent state Buy America rules, which in some cases are more stringent than the federal Buy America rules. So all in all, I think it'll be, business as usual. No one likes uncertainty, but in my view, the uncertainty will be very short-lived, and after that, we'll continue to see Canadian companies take advantage of the largest market in the world.
Great. Thanks, Michael.
Yes.
So we've got time for probably another round of questions. There's some questions coming in through the system, so thank you very much. This question is for Phil, and it's coming from Halifax, and it's talking about technology and healthcare. So Phil, the question is, how will the Trump or Biden government impact some of the larger sectors, in particular technology and healthcare?
Yeah, sure. So starting off with technology, under a Biden sweep, so a blue sweep, that might be the most draconian outcome for technology, because under a Biden sweep, I would expect there to be a lot of stimulus, big infrastructure spending, and perhaps a rotation into more cyclical and value-oriented names, and out of sort of these defensive growth names like these technology stocks that have done so well. Given that the blue sweep seems to be a very, very low likelihood, it's not surprising to see these tech names having a big move today. So if you have a Biden presidency, but the Republicans still taking control of the Senate, I don't see a really big change. I think the fundamentals of the tech sector will continue to shine through, and that's probably why these stocks are doing well. And if Trump were to win, status quo. So that's sort of how I see the technology sector. In terms of healthcare, under a Biden presidency, one of the platform agendas was to increase coverage for Americans through increased Medicare and Medicaid coverage. So that would be good for managed care companies like United Health, and some of those companies are having a big move in the market today. The other thing that a Biden presidency would probably bring is more testing for COVID. So you see a lot of these healthcare names that are involved in the testing and the diagnostics also having a good move today. Under a Trump presidency, you'd probably have a Republican split with there's the chance of a Republican sweep is very low. So I just don't see a big change. It'd probably be more of the status quo for healthcare, whether you have Biden or Trump in office, as long as there isn't a sweep. So that's sort of, some views on those two sectors.
That's great. So this question's for Jason. It's a global question. It's coming in from Winnipeg, and the author writes they're a little tired of all things U.S. right now. And as a global manager, Jason, is there a country, non-U.S., that you really like, regardless of a Trump or Biden win?
That's a good question. I'm not going to highlight it to a specific country. What I'm really laser focused on right now is the Asian tigers. Under the Trump administration, with the America First and the hardline philosophy and the focus on deficits, the area's been hit particularly hard because people view that as a serious headwind. Like we were talking before, if Biden comes in and kind of establishes more norms and procedural aspects to being able to do business over there, and with my take on what's going on with the election, it being very unlikely there's a blue sweep and the Senate is going to stay in Republican hands, it seems to me that the market actually likes that more than it likes who. They don't really care who sits in the big chair. So with the Senate and the taxes unlikely to be repealed, and the ability to continue to do business as normal, if Biden were to come in and set standards, the Asian tigers look like they're really a really good place to look at start doing business. We've got a little bit of exposure there. Kind of want to see who ends which old guy ends up in the big chair from that perspective. A second order move would be, well, Europe is not doing really well. If this becomes a risk on perspective, the US dollar tends to lag vis-a-vis the other currencies in the world. When that happens, emerging markets do really well. Germany has a particularly strong infrastructure and lots of ties with the emerging markets. That would be a country in Europe that would start to look a little bit interesting if all of a sudden, trade relations start to normalize, the US dollar starts to go down, people start to look globally for growth. Germany looks like it might be a good place to start going to look for some spots in Europe, and then of course the Asian tigers.
Great. Okay. Alex, this is for you. It's coming from Edmonton, and it's talking about Canadian engagement. So the question reads, there has been record voting in the U.S., so there's obviously high engagement. With all these results, do you see an encouragement of business spending in the U.S. by Canadian companies?
Thanks, Juan. We've kind of touched on bits and pieces of this topic. But essentially, I don't think this was a scenario that the markets were expecting. I think, as Phil mentioned earlier, we were kind of expecting, or the markets were kind of expecting a blue wave, and what we're seeing is a much tighter race. Obviously, the U.S. right now isn't necessarily unified in that path forward. You got the Midwestern states. There's a lot of uncounted votes. Nevada's not posting updates until tomorrow. But what's really key right now is Wisconsin, Michigan, and Pennsylvania. And it looks like Pennsylvania is siding towards Trump. I think the bottom line is we're going to have a relatively moderate legislative branch through the midterms in 2022. So I wouldn't expect any big tax increases. It doesn't matter who, it doesn't matter if Biden gets into the House. But what we have to remember is the U.S. is Canada's largest trading partner, and Canada is the U.S.'s second largest trading partner. So they're very key to each other. Canadian companies have invested billions of dollars south of the borders, putting up plants and warehouses to do business down there and setting up operations down there, and vice versa. American companies have done the same up here. And if in studying the stock market, the markets go up with every presidency. So the Canadian market and the U.S. market, they go up with every presidency. I think Bush was the only one that didn't have a positive return during his stay at the White House, and that's because he kind of tailed in at the end of the financial crisis of 2008. So, if you dig deeper and you take a look at the Democrats and what outperforms when you have a Democratic president, history suggests favoring cyclicals, technology and consumer discretionary, and industrials, and those are the industries that have outperformed. And if the Republicans win with Trump, historically it's healthcare, consumer staples, utilities, more defensive names that have won. Now that's historic. What we're actually seeing today is something a little bit different. We're seeing an unwinding of the trade that we saw in the last couple of weeks when people were expecting that blue wave. So we're seeing very strong performance on drug stocks, very strong performance on tech stocks, and then those industries that would have benefited from a big stimulus package are unwinding here a little bit today. So we got the banks down, we got the retailers down, we got the infrastructure stocks down, and the cyclicals are down. Now, I don't expect that to be a long-term issue for those stocks as we progress through the next few months. If Biden wins, it's probably good for cyclicals. It's probably not good for oils on the balance. But I do think that the stimulus package, the way we're seeing things unfold right now, a big stimulus package will be difficult to attain. So, bottom line is, what we always tell clients is don't invest by event, invest by time, put money to work over periods of time to dollar cost average in. And, the market goes up over time. Regardless of who sits in the White House. So own good companies, own good getting better companies. The disruptors are always a good place to be, and have a well-balanced portfolio.
Great. So we want to respect everyone's time, so I have time for one more question. It's almost getting to 11:30. The question is about why is Joe Verone, your regional wholesaler in Calgary, so good looking, submitted by Joe Verone. I'm kidding. This question is for Michael Simpson, and it actually comes from Saskatoon. And so the question is, Michael, and it's a great question to end this session with all this expected market volatility, what opportunities, and this is really great because you're going to be taking over the updated North Fund, what opportunities does this provide you in a North American dividend environment?
Okay, thanks, Juan. So there's quite a lot of opportunities. Ironically, the VIX dropped a few days ago from 40 to 28. So intuitively, a lot of market participants would have thought of, we have no clear outcome from the election. The VIX should be up, the market should be down. But there's a lot of sectors that are depressed and beaten up. Even though healthcare is up a lot today in the U.S., earlier mention of United Health, Cigna, CVS, I think there's good opportunities down there. There's some technology companies in Canada like an Enghouse that represent good value. So you look at eventually we're going to get a recovery, but for now, people are working at home. So there's a lot of opportunity, and there's different views as to who's going to win, which sectors will win. So you look at different depressed sectors. So I see it quite good. There's initial euphoria today. You may get different views on the market, but anything around earnings related or political events, usually I'm there. So we've seen a run up in some stocks and industries. I'm more tending looking at the companies that have lagged, but companies that have good balance sheets, companies that can take advantage of the upcoming recovery, that's where I want to be.
That's great. So I want to end by thanking our panelists. So Phil, who leads our NCM Core American and Core Global, Jason, who leads the NCM Global Income Growth, Alex, who leads our NCM Canadian Small Companies and NCM Income Growth, and Michael, who will be taking over the NCM North Fund. So on behalf of everyone, thank you very much. If you have additional questions, please email sales@ncminvestments.com. This recording will be made available. Have a great day, regardless of the winner, and enjoy the markets, enjoy the day. Thank you, everybody.